Hello everyone, welcome to another video tutorial. In this video, I will be taking you through my thought process on what my expectation is going to be like on the GBP USD. Well, this is one pair we had the privilege of taking advantage of some trading opportunity, which gave us some profit as we were able to join. And though we had some couple of buy moments and the week culminated with some selling opportunities which we actually took advantage of. And talking about last week, I would like to share with you some key moments that we had before diving into the current market structure. So during the course of last week's trading session, the week started with a situation here where price was actually consolidating at the beginning of the week, and this was more as a result of the fact that there was no liquidity in the market due to the public holiday which was observed in the US. And following that event, the following day, we saw how price kept on consolidating before the breakdown of that channel happened during the early hours of the second day. So the breakdown of the 1.20150 level triggered a sell position, but unfortunately for the sellers, we saw a situation where price took us out of all sell position and at the same time triggering our buy stop order, which was sitting above the 1.20450 level to trigger a buy position. Then we anticipated another opportunity to add more position above the 1.21, which actually happened, and we rode the move all the way up. But the key moment didn't come until later on that day, where I think prior to the FOMC, we had the simple setup on the 50 minutes time frame where price action was consolidating between the 1.241 and the 1.21 area, which was a key level for that week. Then what happened during the FOMC? I think prior to the FOMC, we saw the breakdown of the 1.21, and it was at this point the market continued to nosedive to the downside, and we were able to add some more positions. Yeah, I think we had about five positions on the GBP USD as we continue to sell at breakdowns of significant structure. As you can see here, we continue to add more position. If you do want to have and you want to look at how we took advantage of these opportunities last week, I will be dropping the link to the commentary in the comment section of this video. And if you are watching on my YouTube channel, you will be seeing the link at the top right hand side of our screen. So you can see here at the end of the week, price action hit our TP target at the 1.193 level on all five positions, and it was at this point we closed our trade. Now, going into the new week, what is going to be our expectation? Well, I would like us to look at the daily time frame first of all. And the first thing you would observe on the daily time frame is the fact that price action has been consolidating between the 1.24500 level and the 1.18500 area in the last 3 months. And so we had the supply zone sitting around the 1.24500, and we have a demand zone sitting at around the 1.18500 level to further emphasize the indecision at this particular point in time. But in order to have a better understanding of what this current structure is saying, we need to take a quick look at what has been happening prior to the formation of this structure. Now, if we zoom out a little further to see what has been happening here in the last 3 to 4 months, you will observe that price action was initially bearish before we saw the breakout of this trend line here. And prior to the breakout of the trend line, price has consistently found higher lows. And if we connect the series of higher lows here, you can see that we have this bullish trend line which further buttresses the strength of the buyers at this particular point in the market. So in the last 4 months now, price action had actually been bullish, and not until price action got into the 1.24500 level we started seeing selling pressure resume around that area. And the continued selling pressure around this area negated all attempt by the buyers to break out of that structure. And this led to a final breakdown of that bullish trend line here a couple of weeks ago to give us a signal that the bullish trend line that has been supporting this bullish momentum in the last 4 months may no longer have the capacity to continue to hold that bullish momentum. And as a result of the breakdown here, we saw price plunge into the downside back into the zone where price action started the new year. So the new year started around the 1.18500 level, which I clearly indicated here. As you can see that demand zone here, we saw buy pressure, which also shares a confluence with that bullish trend line I showed you earlier. And right now, price has climbed to the upside, dropping back into where it started the year. And since then, we have been seeing buy pressure coming in from that same area. So at this point, we really need to understand what is really going on here, see how price action is going to be reacting to the structure here to decide what our next line of action will be. And from the look of things here, and considering the breakdown of that bullish trend line here, and looking at what has been happening since the beginning of the month, you can see that we have a bearish trend line. So I'm of the opinion that price action may continue to do a sell-off in this market, which might lead into a further breakdown of the 1.19 level, which would be the first time it will be breaking down that structure in the last 3 months. And if this happens during this week, I will be seeing this as an opportunity to join a decline to the downside. So this is one of the scenarios I will be looking forward to this week. Then another thing that we should take into consideration, despite the fact that we are looking out for selling opportunities here, is the possibilities that buyers could likely come in this market. And why have I said so? Well, if we look at what has been happening here since the month of November, you would notice that the area where price action is currently is a strong buying niche. As every time price comes within that level, we have been seeing participants in this market seeing the GBP, the pound sterling, as cheap enough to buy. And right now, considering what happened last week, price appears to be approaching that level. So if it so happens during the week that we start seeing rejection of the 1.1900 level, probably with buy pressure on our lower time frame, we would have no choice than to consider a buying opportunity on the GBPUSD. Now, in order to project and position ourselves in such a way that we can catch any of these opportunities that will be happening around here during the week, I would like to share with you what I was able to find on a much more lower time frame, and this will definitely be a yardstick that will be guiding our trading activity for the week. But before I dive into the lower time frame, I want us to look at the economic calendar as we have the week laced with some couple of macroeconomic events that will be bringing some liquidity into this market to drive price action. Now, going into the economic calendar here, we shall be focusing on events that will be affecting both the US dollar and the pound sterling. Now, on Monday, we have the durable goods order and the non-defense capital goods order here. And look at the data we have here for the non-durable goods order. We have a projection by the consensus of a minus 4%, which is a little dip um, from the previous data of 5.6%, which is not something positive for the dollar there, though we have something positive here for the non-defense capital goods order, as we have a 0% projection as against the minus 0.1% here. Then on Wednesday, we have the Bank of England's governor's speech coming up as well. Participants in this market will definitely be looking forward to that day to see what is going to be saying about the economic situation in England. Now, on that same day, also we have the ISM manufacturing PMI, which has some level of positivity there, as consensus are projecting a 48 as against the 47.4. So we are going to be looking forward to see the actual data that will be coming in on that day. Then on Friday, we have the ISM services PMI coming up on that day, and we have a projection of 52.4 a little bit lower than the previous data. So these are high impact events that everyone in the market will be looking forward to. And obviously, we shall be seeing the anticipation of this event reflect on the chart as price action. And so, with the information we have gathered here, we want to be scaling back down into a much lower time frame where I want to show you what I was able to identify on the 4 hours time frame and which we can use to guide trading activity for this week. Well, if we look at the 4 hours time frame here and look at what has been happening since the third week of the month of January, you would notice that price action has been bearish. And in fact, as a result of this, you can see that price action has transitioned into a structure here that looks more like a descending channel, which further emphasizes the strength of the sellers at this point, as price action has continued to find lower highs and at the same time finding lower lows. Now, with the situation we have here and considering the breakdown of that significant structure at the 1.200 level, and like I told you on the daily time frame, price is back to where it started the year. So with the situation here, we have a demand zone around the 1.195 level. So heading into the new week, what we shall be doing here is to remain patient to see how far this bearish move is going to go. And at the same time, we want to see how price action will be reacting to the structure to decipher what our next line of action will be. So, like I said earlier, if we start seeing buy pressure around this area, then definitely we want to be thinking of buying the GBPUSD. And if this leads to a further breakout of the 1.2100 level, which shares a confluence with that bearish trend line that you have there, we might likely this might likely welcome additional position at the site of buying pressure above the structure on our lower time frame, and probably this might lead into price coming back into the resistance point of that descending channel that we identified earlier. However, if it so happens that price action does break down the 1.1900 level, this will have been a beautiful signal that sellers have finally come in to stay in this market, and price action would have taken out all the buy positions here to give us a beautiful confirmation to join a bearish momentum to the downside. So these are my views here on the GBP USD, and I would like to pause the video at this point, but be rest assured that I will be jumping right in the comment section of this video on Monday after monitoring how participants in this market will be reacting to this current structure to publish what my thoughts are against the new week. I hope this video has been of immense help in making your personal decision on the GBP USD. And if it did, kindly support this project by clicking the like button. You would also want to follow me on my TradingView platform at Darkshary, spelled DARCSHERRY, so that you can be part of the daily commentaries I normally share in the comment section of all of my videos. Thank you for watching this video, and I do look forward to seeing you during the early hours of the new week, after which we shall be anticipating our plans for the week. Do have a wonderful evening. Bye bye.